For economic policymakers in China, deleveraging is the #1 task at hand. For the past few quarters, China has managed to keep its growth rate above 6.5%. Experts say it provided room for officials to keep tightening, which is important, as major indicators still suggest that China is generally over-leveraged.
The most important one is the credit to deposit ratios. Currently is about 120%, okay, which is higher than the target set up by the central bank.
The first place that policymakers focused on has been the financial sector. Major measures were started since last year to retract liquidity in the interbank market, where transactions are usually done with leverage and has been contributing to a bigger and bigger portion of overall debt in the sector. Officials also put restrictions on many transparency-lacking banking products.
The aggregate total of structured bank products has declined by more than 1.6 trillion yuan. So it's clear that when Beijing does want to delever, their policies do have an effect.
But that is also a double-edged sword. Credit tightening has resulted in a rise in financing costs for the real economy.
Those small firms or medium-sized firms rely on the new loans to repay the old loans. Okay, so because in general the duration of the borrowing or the duration of leverage in China is very short. For example, 6 months or 1 year.
The People's Bank of China is seeing some of those concerns. That's why it resumed injecting a certain level of liquidity into the financial markets since last month through open market operations. Experts say while policy directions won't change, officials are walking a fine balance between deleveraging and maintaining growth.
Given a reasonably healthy economy, we will see similarly contractive measures into the future.
PBOC Governor Zhou Xiaochuan reiterated last month that China should prevent systemic risks in the financial sector. Experts say to realize that, interbank leverage still need to go down, and banks' capital adequacy ratios still need to rise. Financial deleveraging is a work in progress. Yang Chengxi, CGTN, Shanghai.